Let's talk a little bit about, first of all, inflation in Russia. I want to come and talk about what is happening in terms of COVID in just a moment. Inflation feels a little less transitory in Russia. The Governor Nabulina, talking about significant rate hikes from here. What is your expectation for what is going to be required to get inflation under control?
Well, I think it's a very simple mathematics. You have rates right now at 5.5%, and then you have inflation at 6%, right? And you have core inflation picking up significantly. So at the very least, they need to bring it to neutral, and it's possible they have to go over that. So we expect about 50 to possibly 100 bips, and this is, you see, the hawkish one, possibly up to 100 bips on the policy meeting in July, and then wait and see, hopefully in autumn. If the inflation doesn't decelerate in autumn, then we could have more hikes.
Elina, why didn't the market react?
Well, the market didn't react because she scared them already in the last meeting, when she answered very clearly, first of all, again, the hawkish brush, and then also she answered very clearly, yes, we considered 100 bips already at this meeting. And I think that was a big wake-up call.
If the COVID cases that we're seeing at the moment, the hospitalization and the mortality continues to rise at the rate that we're seeing, how does that change your arithmetic?
Well, it's a tragedy what's happening right now with COVID cases in Russia and also in other places. But the issue is that the central bank's responsibility is also for looking at the economy, at inflation, which affects a lot of people, including socially sensitive parts of the population. So we do not expect COVID to spill over meaningfully into economic growth. So we expect domestic demand to stay strong. We expect lending to continue to be very strong. And that's what the central bank sees. It's likely they will continue with hikes.
But why? Because what's happened in developed economies is that you have a rise in cases, things shut down, and that dense economic growth, as you have spending savings rise, you have spending shift and kind of hold off, and you get the bump later on. Does that model not work in Russia/emerging markets?
Exactly. I think that's what makes a big difference between emerging markets and developed markets. We're having sort of a parallel reality. Well, in developed markets, we have fiscal spending, we have strong inflation, but they can look through it, while emerging markets have to fight inflation expectations. And also on the fiscal front, they don't have access to this almost unlimited capital that the global markets can provide. They can be shut out from global capital markets very quickly.
Elina, Brent's currently trading at 75, almost on the nose. There are some that are suggesting that it could go as high as 100. We have an OPEC meeting, an OPEC Plus meeting coming up. If we do get to 100, how does that change the calculation for Russia? How does it change the calculation for Nabulina?
Well, for Russia, because they're relatively young inflation targeters, they've only really started in earnest in 2015. They're more exposed to the global shocks of commodity prices and even still exchange rate fluctuations. I was actually surprised to find out myself that exchange rate fluctuations affect almost 20% of variability of inflation. So it just tells me that the market is not fully bought into this inflation targeting idea. So if the commodity prices go up significantly, it's likely we'll have some sort of positive effect on the exchange rate, although they buy a lot for reserves. And on balance, it might not actually change the equation that much. If anything, it might give them more confidence to keep on hiking if they don't see inflation coming off by autumn.
Do you think that that would at some point constitute a policy mistake, Elina?
Well, I think the policy mistake they're most afraid of is being late to the game and having to hike much more. If you remember how the term started, they were late to hike and then they had to do 300 basis points. Of course, that was an extreme event of sanctions and the commodity price drop. But I think that something is very strong in their memories. They want to be cautious. And as she mentioned in the last policy meeting, there are big lags on the way that the monetary policy works. It could be 9 months, it could be even 12 months.
One of the things that she told me when I spoke to her a little while ago was that expected inflation, the population's expected inflation was a key metric by which she judged where policy needed to go. Where did the Russian people expect inflation to go from here? Are they expecting this pickup that we're seeing at the moment to be sustained?
Well, first of all, inflation expectations in Russia have always been somewhat higher than the actual inflation. So right now we have it almost at 12%. It's not atypical to have a gap between the policy rate, or sorry, the target rate or the current inflation and this very high inflation expectations. But inflation expectations gap with reality has gotten much bigger in recent months. And I think that's what worries them a lot. So I think that's this big gap between the target inflation of 4% and the expected household inflation of almost 12%. I think that's what they're worried about. And that's what they need to anchor to bring back down.